Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bearish scenario where we are looking for an impulse to the downside, a 5-wave structure where wave 1 and 2 are finished, looking for a wave 3, then 4 and 5. After this 5-wave structure, we want to see a 3-wave corrective move to the upside and another leg to the downside to take the low. Inside this blue wave 3, we then have a lower degree white count, also an impulse counted as a wave 1, 2, 3, 4, 5. The reason we do this is to make sure that the highest amount of volume in this local trend to the downside is positioned in a wave 3, which is by far most common in Elliott waves. If you have an impulse 1, 2, 3, 4, 5, preferably your wave 3 has the highest amount of volume, and that is exactly what you see here on my chart. Now after 3, we want to see a wave 4 sideways ranging structure. The invalidation for a wave 4 is this 0.618 I have on my chart at 62.6k, taken from the start to the end of your wave 3. If we then go to the bullish scenario, then in the bullish scenario, we count a double zigzag to the downside. So we have an ABC finished as a wave W, a sideways corrective structure in a wave X, and then a very sharp ABC to the downside in a wave Y. In this scenario, you want price to move towards the upside and hit 62.6k because it invalidates a wave 4, so therefore it would increase the probabilities that this move to the downside is corrective and not impulsive, which is bullish, not bearish. However, with this scenario, there is something that impacts the probabilities, and that is time. And time is important in Elliott waves. If you take a trend-based fib time from the start to the end of W and you double click here, then you are now comparing the time of W compared to X. And you can see that X is quite short. It finished before the 0.382 fib time, which is not preferred, as most commonly waves are ending after the 0.382 fib time. Now a wave X at times can be very tricky, can be very short, can be very long, but if we then compare W with Y, we have the same problem. Take a fib time from the start to the end of W to the end of wave X, and you can see that your wave Y finished way before the 0.382 fib time, which does impact the probabilities for this scenario negatively. And that is why if you do move to the upside and hit the 618 at 62.6k, the probabilities for the bears are going to be towards this scenario here, where we then have again a double zigzag ABC and WX, but then we have a bigger ABC in a wave Y. And now the time between W and your wave Y is nicely respected. Invalidation is taking out this high here at 64.1k. If we then look at the CVD divergences, then locally here on the 5-minute time frame, we had some bullish CVD divergences. These already played out as price moved towards the upside. And locally here, you can see we also again have some bullish CVD divergences where the target would be taking out this high. I also like to keep an eye on CVD divergences on the right side of the recent high, and here at the moment there is not much going on, as you can see. And if we then look at the probabilities at the moment would be higher for price to still take out this low once more, mainly because of time in a finished WXY structure, because if this is finished, your wave Y is incredibly short in time compared to your wave W. However, it is important to know where probabilities change. In an impulsive scenario, wave 4 is not allowed to touch 62.6k, which is something that you do like to see in a potentially finished WXY. So if you hit the 618, we have to at least consider a finished WXY structure, with then the new bearish scenario being a bigger WXY structure. So ABC, corrective structure, and another ABC to the downside, where here the invalidation is taking out this high at 64.1k. Now, in general, price hit support, the daily naked point of control at 60.2k, and my personal approach is to just wait for either a range to form or a bit of a bounce. I'm waiting for information, we hit support, waiting for a bit of a retracement, waiting for a bit of a range, and then take it from there. I hope that this video was helpful or valuable to you. Please check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott Wave educational playlist to help you understand more about Elliott waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.